It's attractive to investors today because from a risk return standpoint, there's not that many products out there which provide relative certainty of income. Government bonds don't yield that well, and I think the promise for most senior debt fund investors is something around Euribor plus 150 to 170. Not much more, quote unquote, much more, and I think that's the main attraction. Diversifying into a relatively safe product. For insurance companies, it's an asset class that they've already known for a number of years and invested directly into. So they don't need massive human resources shifts, from property investing to property debt investing. You may need to add one or two core competencies to your existing teams. So the marginal cost of going into the market is not high, but the marginal gain of diversifying, remaining with an asset class that and generating marginally higher returns is the attraction today. There's not much being raised in the form of funds. In the figures that I've shown, of the 3 billion available to be financed over the next 2 years from alternative lenders in France, only 1 billion has been raised through funds. Which is probably 300 million a year for the next 2-3 years. That's not massive. So I think there's still room for people to raise debt. But as you said, it first needs to deploy. And I think a lot of the funds now realize that the commercial layout that you need to have to talk to borrowers directly or to talk to banks to originate loans that fit your criteria just takes a bit more time than expected.